Good weekend, all. Ira Epstein with your SPDR ETF Stock Market Weekend Edition wrap-up, and this is for Sunday, 7:25 p.m. Central Time. I got very ill with the flu starting on Friday, and it just didn't go away on me, folks. It took me down. Today's the first day where I'm feeling better by a lot, but still knocked out. I mean, when I'm through with this, I'm going to have a bite to eat finally and go back to bed. And tomorrow, over the next 48 hours, I'm sure I'll get better. But it wasn't COVID. We tested for it over and over. Definitely not that. And that's what's going around. People are either getting a cold, the COVID. There's different diseases going around right now. And, you just go out and you don't know what you're going to get. It's that time of the year. So, let's talk about last week. It was what I call the labor week. It's where we got from the Labor Department and other sources, JOLTS, and we saw other things, ADP, that the labor market is still very strong. There's still plenty of ads out there. ADP, big numbers. Challenger didn't cut as many corporate jobs as you saw. And we saw that on Friday's labor numbers that we are still getting an increase in wages, but not at the pace that they were. And the market, as it's been doing on this whole break, is either looking for a pivot in the Fed or it's looking for the first signs, because everybody wants to be the first guy on the street to own stocks before on this drop, saying they caught the turn. Okay. Whether you're going up 5% or wages are going up 3%, they're going up. They're not going down. That's the important thing to remember. What it does mean, and I agree, if you can get away from the hikes getting stronger and they're less, it means that as an employer, I can say, instead of me paying $25 an hour, maybe I'll try to get some people in at $24 in labor cost. That's one way that you're looking at it. The other thing that we have to look at in the stock market is we've had a pretty good break. We've taken down, as an example, Tesla and other companies to where PEs are not normal yet in a Tesla, but in a number of companies they are. Apple's getting hit the same way. All the automakers have been coming down. Airlines have been doing better. I mean, I can go down the road and tell you, but the name of the game was to get PE ratios down, and they're coming down. Now, there's another shoe about to drop on you, and that is we're going to get corporate earnings coming out now. And as they come out, if I'm the head of a company, I'm probably coming out and I'm going to do the warnings. I'm going to say, hey, folks, I'm sorry. Inflation, the slowdown in the economy, what the Fed's doing, it should slow things down. I think that we've got to put out some warnings here that maybe we have to let more people go. Maybe we got to cut costs more. Maybe we're not going to generate as much. You want the cover. The corporate guys don't want to say they got it wrong. They want to say, I told you so. Oh, I was wrong. We did way better due to such good management from my underlings and blah, blah. You get the story. That's how the game works. So look for that to be a headwind coming in now in this quarter. That's where I think you're going. Now, Costco surprised the heck out of the market with stellar numbers on sales on Friday. And you could see this market opened up at 458, dropped down, and then roared from there up to 484. So is that a trade bottom? It could be. When you take a look at this market on a weekly chart, you made the lowest low. You've reversed course. You no longer have the pattern in play. If I can get this to do it, I don't know if it'll want to. I don't think it's going to let me do that. But you no longer have the play of lower highs. You have a higher high and a lower low on the chart. I expect the first resistance to be right here. The 18-week average of closes. It managed to get itself up and over the 100-week, but I think that'll be an area of fighting. Do I expect it to just run through that number? I don't see why it would. It did not make it to the lower Bollinger Band, and frankly, unless the earnings come out with a massive surprise to the downside, I would think that's not going to be in the stars for this market. I think the market is saying maybe the worst is behind it and it's got to consolidate this whole area. In momentum, it's trying to turn to the upside. When you come to KBE, which are the bank index, on a weekly basis, you're still in a downtrend, and the first test for this market is going to be the 46.86 level. What I teach and what I told you, I'll stick with. The first challenge of a combination of a 200-week and lower Bollinger Band are where professionals cover shorts. If you haven't taken my enhanced Bollinger Band course, I'll talk about it right when this is over. In the industrial, now, while everybody wants to talk tech, I think the industrials might be even stronger than the tech's going to be. I don't know why, but over the weekend, everybody's writing, oh, the techs will explode as soon as interest rates have peaked out. When you're through with COVID, what are we seeing? Be it a Salesforce, be it Zoom, all the things that we bought in high tech because we had to stay indoors for over 2 years due to COVID are sort of out of favor. I wish flavor is interesting, but favor. And what's going to be more in favor, I still think, are the industrials. And we'll see if I'm wrong on that, but that's my guess as to where we're going to be. In XLE, the energy, I'm very friendly to the energy because I think the world's going to, number one, it's learned as China just came into the fold. They've just thrown out this week, there's no more controls. You want to go to China, you go. The people want to leave, that's it. We, as foreign countries, many of us, Portugal, Spain, everybody's adding controls from China because of the outbreak and because they're not being transparent about how bad it is there. But that doesn't mean the citizens can't come. You get a test within 48 hours of boarding the plane, you can come. It's that simple. And I think that's very, very important, all right? So I think eventually that makes the energy market come alive. The next test is, can it clear 88.36? The market is in a battle right here at 84.85 for the direction of that at this point in time. When I look at the foreign investment, well, and I'm talking the euro in this case, foreign currencies, not investment, but you're embedded. That means to me, each one of these breaks, I think the pros are gobbling up the euro. They'll be out if the red line closes under 79, and they're going to look for the Bollinger Bands. In this case, the 156 level. GLD, I've been bullish on because I think the dollar has peaked. Yes, you can get bounces along the way, but I think some of the other currencies will be more interesting in the near term. And because of that, I think gold doesn't have the headwind of the dollar, and I think you're seeing that. And I think that with the embedded reading now in place, good breaks are going to continue to be bought in that market. If gold's good, the miners probably come alive in time. It's been, though, that market. Now, Cathie Wood's ended up the year as a disaster. There's no other word to give it. Now, she's loaded up on Tesla again. So if Tesla comes alive, this woman's going to do well because she's the big buyer. I mean, every time she buys a couple of 100,000 shares, she gets all the press about it. She gets plenty of press time on CNBC and other stations. Why is beyond me? Because she was one of the worst performers of funds. Why don't they talk to the people that outperformed? I'm not against her. I'm against the concept of the fund in this revolutionary thinking for software and internet companies and companies that will change the world. We're not there right now. We're at the point of coming out of COVID. So I'm just not in favor of the concept of that fund. I'm probably wrong, but I'm not. In Apple, I have been in the bear camp, and I'm not seeing any sign other than when you get to a Bollinger Band to cover shorts. You're not embedded. I don't want any part of it now. So if it drops to the 200-day average of price, do it without me on a weekly basis chart. Give me a good rally, I might change my opinion about being short, but not here. It's also doing some things very good. It is finally moving some production, signing contracts to move production out of China. May be too late. Maybe China won't have to shut its factories down again, and that the move is too little, too late. So I doubt that they'll shut everything down. When you look at Tesla, you can see the problems it's got. I'm going to repeat it. At the end of the day, to me, it's a car company. And I know SpaceX, and I know the other wonderful things it does. And I realize Tesla's in battery storage and all that, but so's everybody going to be. And there's more competition. There is a number that I want to own it. Obviously, on this chart, I haven't hit that number. In Meta has recovered, just think about it, from that washout October, November, This chart's actually for the first time bullish. You'd have to get back under here, the 112.46 area, in order to negate that. But the chart is getting its legs under it. Do I want to buy a market that just rallied up roughly 25%? No. I'll let somebody else want to do that, but I'm interested in it. In TLT, I like this. Until you take out 90.35, I think the pros will buy the breaks in the market, looking for higher highs, because they're going to say the 20-year back, you're not going to get all that pressure. The bet is that the Fed won't have to go the whole year. That's the bet the market is making at a 25-point hike that just, several of them, that just stay in place through the whole year. The market is betting against the Fed. And if they're doing it, TLT is part of that bet. Excuse me, that's the news. So you put it all together, you try to come up with a game plan, and that's what I try to help you with. How? Well, as you keep hearing me talk, these Bollinger Bands are so important. If there's any legacy I left with myself as a chartist, it's how to put together that enhanced Bollinger Band course, the slow stochastic study with that, and the possibilities it offers for your type of trading. Take a look at this. Welcome. I'm Ira Epstein, and I'm here to talk about my enhanced Bollinger Band course. Now, many of you have taken my regular charting course, and if not, you might think you know something about Bollinger Bands. As you know, Bollinger Bands are an algorithm designed to keep the market trading within it 95% of the time, and on a chart, it will offer on the top part resistance, on the bottom support, and the idea is the market will travel within them. We know that sometimes it latches onto that band, goes up or goes down. Well, how do you play with that? Can you pyramid the positions off that type of thinking? Well, I've applied all three of these into 13 different videos that teach you my concept of it. And from that concept, you're able to work with weekly charts and or daily charts. The 13 videos, each about 7 minutes long. The idea here is not to put you in school forever, but to teach. Now, if you haven't tried my complete futures research, I throw that in as well. Whether you've tried this or not, I think it's worth taking a look at. I think you're going to learn something from there. That research, by the way, covers twice daily market updates for you and access to what I call window envelope numbers, which I think are very important when looking at these Bollinger Bands. The next part is a trial to our charting software so you can make your charts look the same way that mine do. It's that simple. Where do you go with it and how do you get all this? It's simple. You go to our website, www.iraepstein.com. If you go to the word education, everything you need is answered there. You can also call my staff. They'll be happy to help you get set up. I'm Ira Epstein, on the road to your education.